There is a level of frustration that we heard from Jim Farley during our exclusive interview.
We lost about 100,000 units of production, and that's very material for us. Came in late in the quarter. Most of it is chips, but some new supply.
We lost 2.1 billion, I should say,
right.
Last year. You're going to lose about 3 billion this year.
We're focused on quality, we're focused on our cost, and we're driving that out. We know what the game plan is to fix those issues. We're on it. It's the #1 priority for our leadership team.
Hello motorheads and car enthusiasts. Welcome to Drive Press. Today we're shifting gears to delve into the issues facing one of the world's top automakers, Ford. Despite consistently trying to deliver innovative vehicles, Ford finds itself grappling with significant losses in its EV operations in the face of all-electric trends. The Detroit company has set profit targets for the year. But the reality has been challenging. So what is Ford thinking after losing billions of dollars? Are they planning to redefine their approach, or is there a fundamental shift in their corporate strategy? Join us on a high-octane journey as we explore these pressing issues. If you like our content, don't forget to subscribe to our channel and hit the notification bell to never miss an update. Ford recently announced staggering losses in its electric vehicle sales. The company's investment in electric car technology has resulted in a loss of $3 billion before taxes over the previous 2 years. It is expected to result in a loss of the same magnitude this year. However, the company believes it will still be able to meet the profit objectives set this year, which range from $9 billion to $11 billion. According to Ford, the EV losses as well as the total profit were realized before the deduction of charges related to interest and taxes. The company lost around the same amount of money on electric vehicles throughout the previous 2 years combined. It was reported that the company lost around $900 million in 2021 and $2.1 billion in 2022. This is the first time it has provided a breakdown of the outcomes of its electric vehicle operations. Still, the company said that it has high hopes for the profitability of electric vehicles and predicted that it would go from a 40% operational loss margin in 2018 when it sold over 96,000 EVs and brought in $5.3 billion in sales to approximately an 8% profit margin by the end of 2026. It anticipates that by the end of the year, increasing manufacturing of electric cars will raise the annual pace of worldwide production of these vehicles to 2 million. Even if Ford successfully achieves its profit margin objectives for its electric vehicle business, the company will still post far lower profits than the industry leader, Tesla. Again, removing the cost of interest and taxes as well as depreciation and amortization, it recorded a profit margin of 22% for the fourth quarter. Even while it is not an exact comparison to the profit margin stated by Ford and other long-time automakers, it is an indicator that Tesla has a wide range when it comes to earning a profit from the scale of electric vehicles. At the same time, legacy manufacturers struggle to profit from electric vehicles. By the end of this year, Ford intends to manufacture electric vehicles at a pace of 600,000 per year. This means that Ford must make some tough decisions to get back on track. One of the big decisions taken by the CEO, May Farley, is restructuring the company into 3 distinct business divisions: Ford Model E, which focuses on electric vehicles, Ford Blue, which concentrates on vehicles with internal combustion engines, and Ford Pro, which is dedicated to commercial vehicles. Officials from the company have predicted that the electric car business, known as the Ford Model E, would be profitable before taxes by the end of 2026, with a pre-tax profit margin of 8%. Ford Model E Chief EV and Digital Systems Officer Doug Field remarked, "This will be a really big change in the modernization of how we're going to do our business." As a result of the adjustment, the company's predicted profitability and operating profit margins improved. As a result of the reorganization, Ford anticipates that EVs will make up to 50% of its worldwide sales by 2030, up from 40% in earlier projections. From its current 8% level, the operating profit margin is projected to rise to 10% by 2026. Ford claims that its new organizational structure will allow the 118-year-old Michigan carmaker to operate with the agility of a startup and the depth of knowledge of a high-volume manufacturer. Ford's Model E division is geared towards the rapid development and production of electric cars using Ford's extensive R&D production infrastructure. Additionally, the division creates linked services for the Ford family, the Ford Pro, the Ford Blue, and Lincoln. Ford Blue is expected to keep the firm afloat as the Ford Model E ramps up. Ford Blue is going to be the profit engine of Ford, said Stuart Rowley, Ford's Chief Transformation and Quality Officer, providing the blood to pay for that future. The new Ford Blue unit may be the most intriguing of the two. Its existence demonstrates Ford's determination to maximize profits in its fossil fuel division, with good cause too. The manufacturer now offers one of the industry's most exciting and sought-after product lines. The Ford Bronco is a huge success. The Ford Maverick pickup, released at a shockingly low price, has also been a huge hit. Similarly, the Mustang and the F-150, two of America's oldest nameplates, dominate their respective markets. Ford CEO Jim Farley said the company would continue investing in internal combustion engine technology. "I'd want to stress that," Farley remarked. "We plan to put money into gasoline-powered vehicles." Ford is implementing significant cost-cutting measures to counterbalance the high costs associated with electric vehicle production. The company plans to announce a new round of job cuts, potentially affecting thousands of salaried workers in the US. The corporation said it had begun notifying hundreds of engineers and other paid workers that their positions would be removed. Recently, Ford terminated the contracts of around 200 temporary workers. Ford spokesman T.R. Reid would not confirm the exact numbers of layoffs happening. Still, he said it is far less than the layoffs made last summer when the company dismissed 3,000 white-collar staff and another 1,000 contractors, most of whom were located in the United States. Reid said that all business areas would see layoffs, with the majority occurring in engineering. The impacted teams were convened to inform them of upcoming measures this week. Then, we'll send out individual notifications today and tomorrow, Reid added. Jim Farley has said that many employees lack the necessary expertise to assist the company in its shift from internal combustion to battery-powered automobiles. He claims that Ford's actions demonstrate the company's improved ability to adopt new strategies. As for the company's employment needs, he added it's more real-time and not kind of big Titanic events, with software development being one example. The goal is to streamline operations and reduce expenses, aligning staff with the skills necessary to drive the Ford Plus growth plan. These cost reductions are vital for Ford to enhance its competitiveness in the industry and bridge the gap between legacy automakers and the disruptive startups. Ford has set ambitious goals for its EV division, with plans to produce 2 million EV units annually by 2026. Ford anticipates investing $50 billion in EVs between 2022 and 2026. They had budgeted $30 billion for the first 5 years to 2025. However, the transition to electric vehicles comes with significant financial hurdles. Electric vehicles are the future, but they are more expensive to produce than gas-powered vehicles due to higher raw material prices and disrupted supply chains. Furthermore, rising labor costs and the current lack of profitability in the EV market pose additional challenges for Ford and its competitors. Despite these obstacles, Ford remains optimistic about achieving positive operating margins in 2026. According to the CEO last year, the Mustang Mach-E electric SUV starts at roughly $42,995, nearly $25,000 more than a similar Ford Edge gasoline SUV. The battery alone will set you back $18,000, and the charger will cost a further $3,000. Along with these expenses, Ford, like other businesses, is also dealing with growing labor costs. These assets are now losing money across the board. Ford Model E reported a loss of $700 million in the first quarter before interest and taxes. Compared to the fourth quarter of 2022, this represents an increase of $100 million. During an investor conference call, Ford's CFO John Lawler expressed confidence in its ability to meet its EV profit goals. He attributed the confidence to the wealth of talent at Ford, including former Tesla employees who bring valuable expertise in designing energy-efficient vehicles. Ford has encountered various challenges in EV production, leading to unexpected costs. For instance, issues with Mustang Mach-E's wiring harness and underinvestment in braking technology resulted in missed profit opportunities and increased expenses. Amidst Ford's financial challenges in the EV market, a glimmer of hope emerges as the automaker secures a massive loan from the US Department of Energy. In a move reminiscent of the post-recession bailouts, the $9.2 billion conditional loan represents the largest government offering to an automaker since the Great Recession of 2009. The loan is part of the Department of Energy's Advanced Technology Vehicles Manufacturing Program, renowned for its past support of industry leaders like Tesla. Recent beneficiaries of this program include General Motors and LG Energy Solution, who joined forces to construct a groundbreaking lithium-ion battery manufacturing facility. Redwood Materials, the brainchild of a former Tesla technologist, has also received support for its electric vehicle battery recycling and manufacturing venture. The corporation got a similar loan of $5.9 billion back in 2009 at the height of the recession to upgrade factory infrastructure around the nation and increase the fuel economy of its cars. The company's plants were modified to produce tiny automobiles with better gas mileage. Ford's treasurer, Dave Webb, stated how the deal would benefit the company and its consumers. It's going to help make great EVs available to more customers while powering thousands of good-paying jobs and American manufacturing, Webb said. As Ford continues to grapple with significant losses in the EV market, this massive loan from the US Department of Energy presents a lifeline, enabling the company to accelerate its battery manufacturing capabilities and navigate the evolving landscape of the automotive industry. We all know that the complete transition from ICEs to EVs is a rough path, even for the most prominent automotive companies. If you liked this video, be sure to subscribe to our channel for more exciting content on the automotive industry. Don't forget to like this video and share your thoughts in the comments section below. Thanks for watching.